In this video, I am going to be revealing the trading strategy that I have used to net over $100,000 in profit in the markets. As you can see on my live brokerage statements on the screen right now, this is a live US regulated brokerage that I've logged into on camera to show some transparency in this industry. And in this video, I'm going to be laying it all out there. I am going to be showing you guys start to finish my trading strategy and how I find the trades that I trade, how I have done this for a while, and what has led me to make the profits that I just showed you. Now, again, I don't show those profits to brag or anything to come across arrogant. I show it to try and be real in this industry where there's a lot of people flexing fake stuff and, showing that sort of stuff. I'm gonna really show you guys start to finish, no course paywall, what I trade and why I trade it. So let's get started. So in this video, I've taken some time to prepare and show you guys my trading strategy in detail. As I scroll through it right here, you can see all of the different levels of stuff that we're gonna get into this video. So feel free to skip around if there's something that you wanna learn a little bit more about, but again, this is my trading strategy in its complete form. So let's jump in. First of all, let's talk a little bit about the theme of my trading strategy. And I want to just say before I get into this is my trading strategy. This is what works for me, and this is what I've done for the years that I've been trading. I want to encourage you to also make sure that if you have not already done this level of depth to your own trading strategy, I highly recommend you do it. It's important to backtest and write down your trading strategy. Just like any good business would do its research, then build a trading business plan, you want to make sure you're doing the same for your trading. So here's mine. So first of all, the theme. I am true and true a trend follower. I love to look for great trends in the market and try and be a part of them. I love to trail stops in my trading, meaning, using a trailing stop, letting a trade run as much as possible. And I use a combination of fundamental, sentiment, and technical analysis to find the trades that I take, which we're going to get into detail in this video. I'm, again, putting it all out there for you guys to see. So the primary signals or triggers that are going to get me in and out of trades are going to highly be revolving around price action, using the average true range, market structure, and support and resistance, or supply and demand, whatever you'd like to call them, as well as, of course, taking into account, as mentioned before, the fundamentals and sentiment in the market, which I'll explain in more detail in just a moment. Next, let's talk about the assets that I actually trade. So here you can see all of the different things that I trade. I trade the NASDAQ, the S&P, the Dow Jones, gold, US oil, dollar FX crosses, and Japanese yen FX crosses. So I trade a lot of different things here. And what I've also done is I've included the Forex equivalents for Forex traders or Forex brokerage users. And of course, also the stock market ETF equivalents that I trade. As a US client, we're pretty limited in what we can and cannot trade. We can't trade CFDs, which is the middle column here. So if you're in the US, you may want to use the same broker that I use for this, which will be linked down below in the description. It's called Webull, and there is a awesome sign up bonus if you use the link down there. So check that out. Anyways, let's also talk a little about the software, the tools that I use. We use some proprietary trading software that is built by my software company, A1 Trading. If you haven't heard of us, we build tools for traders and pretty much level up the retail trading game with some hedge fund level trading software, some pretty powerful stuff. So we'll get into that in just a bit as well. So next, let's talk a little bit about the market conditions that I actually look for when placing trades. Now, before we even get into I buy here, I sell here, trail stop here, that sort of thing, before we can get into that, we need to address, generally speaking, the market types or conditions that we're looking for. Some traders may be looking for range-bound markets. Maybe you're looking for a market to chop back and forth, and that's your ideal situation. Or you're looking for a reversing market, and that's what you're looking for. For me, what I'm looking for is clear directional bias in a market. I'm looking for something that is trending up or trending down pretty strongly, and I'm not really too interested in sideways markets or kind of weak trends one way or the other. I'm looking for strong, obvious technical and fundamental trends in the market. So I'm looking for markets that have high levels of volatility. I'm looking for clear, as mentioned, technical trends as well as pullbacks in those trends. And I'm also looking for obvious fundamental trends, which we'll talk about in just a moment as well. And then finally, I'm looking for polarized market sentiment. And if you don't know what I'm talking about this, again, we'll talk more as we get into this, this full course material here. Basically, I'm looking for some strong market extremes, like are all of the retail traders buying something, or are professionals putting their money into gold or something like that. If we can pick up on something that definitely plays into part of my trading strategy and why I take certain trades. Next up on the list is what everybody wants to know about. Entry triggers. How do you find your entries? When do you buy? When do you sell? When do you not take a trade? Let's get into that. Of course, this is what everybody wants to know. Technical triggers are where we start. And I will say this is the easy part. Again, if you've watched YouTube for a while, you've probably been almost brainwashed with technical analysis. There is so much technical analysis available. Everybody talks about it. You have probably seen all about trend lines and candlestick patterns and moving averages and technical indicators. There's so much of that stuff available. And in my personal opinion, most retail traders, and I'm talking retail as in amateur traders who are not yet profitable, they fixate and obsess with technical analysis. Now, I want to say that that's my warning. I don't think technical analysis is useless in any way. I think it can be a very powerful, useful tool in your toolbox, but it is not the end all be all in my personal trading. Can it be for other people? Sure, maybe. I'm not the gatekeeper of trading by any means, but in my personal trading, it is one component, but it is not everything. So let's talk about the technicals to get that out of the way. In terms of moves that I'm looking for clear, obvious breakout moves, as I mentioned. I'm looking for stuff that is exploding higher or exploding lower, and this is where I start my analysis. So I'm looking next for the obvious higher highs, higher lows, or if it's a downward market, lower lows and lower highs. Clear, obvious downtrends or uptrends. Textbook stuff, keeping it really simple. So again, of course, here is a bullish example. You can see there are higher lows in this market, there are higher highs in this market, and overall, it is pretty obviously a bullish market environment. We can flip that and say for the bearish scenario, same thing. Lower highs, lower lows. No question of whether or not this is a downtrend or uptrend. It's very obvious. And I should also clarify that I am mostly, as mentioned previously, I am mostly trading the 1 day, the 4 hour, the 1 hour, and the 30 minute. Now, I am looking more for trends on the 1 day in the 4 hour chart, but then I actually execute over here. So my execution timeframes are more the 1 hour and the 30-minute timeframes. And then of course my trend direction in terms of a technical bias is mostly due to the 1 day and the 4 hour chart. The next thing I'm looking for is the technical analysis staple. Everybody does this. They look for breakouts and the pullback or the retest. I love trading retests. I love trading pullbacks. Again, it's simple, but it can really, really work. And it's something that I use in my analysis. So the next thing I'm looking for, like I said, is pullbacks in the market. So I'm marking up key zones, and then I'm looking for these zones to break out and then retest. So I'll show you that in a little bit more detail. Here's a bullish example. So you can see that, we have levels of resistance here that then broke out and became levels of support. So let's take an example, this first one, right? So you have a resistance point here, price sold off, then price breaks higher, and now this area becomes a level of support. Breaks out, this previous level of resistance becomes an area of support, so on and so forth. You can see the black dotted text here or drawings here illustrate the idea of a potential next pullback leg to possibly be a buyer in this upward market. Now, same thing on the bearish side. We could flip it around and say, here's the bearish example. You can clearly see there's a level of support. It breaks out, it retests, breaks out, retests, so on and so forth. So again, you can see this is really rudimentary, simple level stuff when it comes to technical analysis, but this is what I'm looking for. It really is trying to keep it really straightforward and simple. I'm looking for key areas of support to break in a downtrend, and then I'm looking to sell those areas on a retest and vice versa in a bullish market. So now that we've gotten out of the way some of this simple technical analysis stuff, we will come back to some more technical components that I look for in just a moment. The next thing we have to talk about is market sentiment. And this is really important stuff that not a lot of traders are using in their analysis. Now, first of all, what do I mean by market sentiment? Well, obviously there are lots of different participants at all different levels in the financial markets. You've got banks, you've got hedge funds, you've got large speculators in the markets, big money. And then you've got all the way down to your retail level, which is people who are probably like you and me, trading on retail level brokerages that allow us to, do our small part and involve in the markets. And believe it or not, I should say, sometimes people bash retail traders as, just 100% losing. It is true that retail traders tend to lose money, which we'll talk about more in just a second, but just because you're a retail trader does not guarantee that you're going to lose money forever. There are, in existence, plenty of profitable retail level traders who have found their edge in the markets and who have traded over time. So again, you can look at some of anybody who puts out their statements and shows that they're, legit, that they really have traded and made money consistently over time. Likely they are retail traders who have figured it out and have done well for themselves over time. That's something that I've worked really, really hard to get to, which obviously you can see by the level of depth that we're getting into. There's a lot to this stuff. So let's keep going. So the other side is institutional money. So I mentioned there's the really smart level traders that manage a lot of money, and the winning traders, the professional traders, and there's the losing traders. So when we talk about tracking the smart money or the pros, right, this can be a really powerful thing to pay attention to. If we know that institutional traders are buying a particular asset, let's just say it's gold, for example. If we know that institutional money is flowing heavily into the gold market, they're really buying a lot of gold future contracts, or they're really long gold, obviously. That would make me inherently a little bit more bullish on gold. Now, it's not the only thing I'll look at, but it is a key thing. If we know that institutional money, pros, smart money, whatever you want to call them, if they're buying gold, I'm a little bit more bullish. If they're selling gold, I'm a little bit more bearish. And that's just something that we track, and it's something that I've used in my strategy for a long time. So before we talk about the retail trading level, let's now take a quick look at what the institutional traders data is looking like and how we can track this data for ourselves to get an idea of what institutional money is doing with gold, or the US dollar, or the euro, or the S&P 500, or pretty much anything. I'll show you that data right now. Okay guys, so I've got the COT report pulled up here, which we call the Smart Money Tracker within the Edge Finder. Now what you'll notice here is that there's a lot of red and blue, and at first this may seem like a lot, but the main goal here is to showcase the COT report data in a really simple to understand way. What we can see here in this first section is going from left to right. We have the most bearish and most bullish assets according to COT positioning, or basically what smart money is doing. So on the left, you can see things like the Japanese yen, the Australian dollar. These things are more bearish. The positions that are held by institutional traders are more on the short side. Now, of course, this is contrary to retail traders. This is just looking at what large speculators, the pros, what they are doing with their positions. On the flip side, you have things like gold and euro and the oil market. These things are more heavily bought right now. Now, of course, this is not, a perfect metric to always know what's going to happen next in the markets, but having an idea as to what institutional money is buying or selling, or where their positions are at, is really vital information. In this second category, we can also take a look at the most recent filing in its detailed format. So what I mean by that is that this report gets published or uploaded once a week, and the software that we have here automatically pulls all of that data in, and it visualizes it in an easy to understand way for people who want to look at what pros are buying and selling. And so what we can see here is that in the recent week, we had a lot of information come in from all these different assets, right? Oil, the South African rand, the US 30, gold, silver, etc. What we're going to do now is we're going to take a look at this far right column. This column is my favorite column on the data. It shows in the most recent week's filing what the net change in terms of all the different long and short contracts, right? We had an increase of 37,000 contracts here on the long side for the S&P 500. If you're someone trading the US dollar, here is, the long contracts versus the short contracts and the most recent change. Well, this far right column does a lot of the work for us. In this column, we can see the net change in the most recent filing. So in this case, the S&P 500 had an increase of 3.2% in its overall positioning. And same thing with the US dollar, we had a 2.9% increase. Pretty sizable, notable amount of change in the most recent filing. Now, why does that matter to you as a trader? Well, If we know that institutional money is building a position quickly on the S&P 500, or they're buying the US dollar, we may be able to tag along and find some opportunities within that. Now, of course, this is not, perfect, forecasting or crystal ball stuff. It's just something to add to your toolbox, which is the whole point of this entire strategy. We combine lots of different factors to get a better picture as to what the market may do next. So on the flip side, for example, we could see like the Canadian dollar had a big decrease, and same thing with silver and gold, which both had pretty bearish readings. So I use this data all the time to help me make informed decisions as to what I want to be buying or selling. Next up, let's talk about the retail trader and their sentiment in the markets. Now again, the sentiment component is two legs for me. It's institutional money, smart money, and it's the retail trading level. What do retail traders think about a particular asset in question? Let's say the dollar yen. If we're looking at the USD/JPY currency pair, is retail long or short, and how polarized is this category? Are they incredibly bearish on the dollar yen cross? Because if so, that actually might be a bullish or a contrarian indicator for me in my trading. Because if I know that retail traders are very much betting against something, and I also know that retail traders typically lose money consistently, I may not want to be on the same trade as them. In fact, I may even want to fade the trade that they are in. So let's give it another example. Let's say that on gold, retail traders are very bullish on gold. Like they have let's say 70% of the positions that they have across the retail board are on the long side. That might actually be a bearish trigger, a bearish signal for me, and I may factor that into my analysis to be a little bit more bearish on the gold market. So here's a look at what retail is buying and selling, and we can use the retail positioning tool within the Edgefinder. Now, of course, this data is pulled from a collection of brokers and different sites online that allows us to take a look at what retail traders, on average, pulled here, think about various assets and charts. So for example, we can see right now that on the dollar Japanese yen, there's a big short interest in terms of open positions from retail traders. On the flip side, we could take a look at NZD USD, and we can see that there's a pretty good sizable long position from retail traders as well. So we can use this as a potentially contrarian indicator, meaning that this would be more of a bearish signal for us, and dollar yen, this would be a little bit more of a bullish signal going against what the crowd thinks. Within the Edgefinder, we can also do any sort of thing. We could also take a look at commodities, which would add gold and oil. So here it is, we've got oil's perspective, and we also have gold, which at the time of recording is about 55 to 45%, so it's not really producing a strong signal in either direction. But this is retail sentiment, and it is another nice tool to add to the toolbox. So just a reminder, if you don't have a copy and you'd like more information, click the link down below in the description and get yourself a copy or chat with someone on our team who can help you to do so. Next up, it's time to talk about the third component to what I look for before taking a trade, which is the fundamentals. If you're not a fundamental trader, then this section might be a lot of new information for you, but for me, this was absolutely a game changer. Some traders might call this being a macro trader. Macroeconomics, of course, is what it's short for. Looking at the world economy, the US economy, the European economy, whatever you're looking at, and using some specific health measurements of those economies to weigh which trades we want to take. So I know that sounds like a lot, but here's a quick worldwide example that you could take into account. COVID-19 changed everything for markets for a short period. Everybody was, really struggling during that time, and we saw supply line issues really slow up tremendously, and the stock market sold off, and supply lines were cut terribly, so it caused high levels of inflation that for years now have been kind of the markets picking up the pieces story. So these sorts of things, for example, another one, the Ukraine invasion from Russia, right? Russia invaded Ukraine, and it totally disrupted markets. These are what we would call geopolitical fundamental factors. These are, politics, presidential elections, Congress elections, or, the ECB, the European Central Bank, what's going on over there? What's going on with NATO? There's so many different things that geopolitically can stir markets, and sometimes I will actually trade off of the back of those new incidents. If something traumatic is happening to the markets, I may factor that in. It's not actually on this sheet here, but it really should be. Geopolitics do play a role in my trading. I take a look at things like that, and I do, after my research, have some level of fundamental analysis that I incorporate just from the geopolitical side, right? Traumatic things, Taiwan, China, if that were to become a thing, those things can cause a change in bias in my market analysis. However, in this video, we're going to also fixate a little bit more on the economic data, the strict numbers that we can actually get from major economies around the world, and we can get an idea of the health of those economies. Of course, the US, Canada, Europe, UK, they all put out their numbers in terms of how their labor market is doing, how well their economy is growing. And these things are driving forces in the currency, in the stock, in the bonds market. These things are real drivers that we pay close attention to. So let's now get into some of the economic figures that we can analyze, that I analyze to take the trades that I take. So first of all, we talk about interest rates a lot on my channel, and it is something that is really important if you're a currency trader especially, but it also impacts just every market. If you trade indices, which are some of my favorite things to trade, all of these things are impacted heavily by what the Federal Reserve is doing with the interest rates. In the United States, the Fed sets interest rates. In the European region, the ECB sets their interest rates. And central banks around the world, of course, have this as one of their tools to rise or fall inflation accordingly. Anyways, let's get into it. So interest rates. In the US specifically, let's just talk US, because all of these things we can repeat the process for different central banks. For example, if I'm looking at the euro, I want to pay closer attention to the ECB. But for example here, we're talking US, which is of course the Federal Reserve. Are interest rates rising? This is a question that you have to ask yourself. If I'm using this model here, I'm asking myself, are interest rates in the United States, is there a trend to the upside, a stagnant trend, or a trend to the downside in interest rates? This is a different type of trend than you may be used to with technical chart trends, but I'm talking about a fundamental trend. Are interest rates in the US rising? If so, I'm going to be a little bit more bullish US dollar, as a rising interest rate is going to create demand for the currency, as essentially people outside of the US may want to buy interest rate related products in the United States, like bonds or different things like that. Anyways, the point is you have to know for the basics of fundamentals that rising interest rates are generally very bullish for the underlying currency. In this case, we're talking US and Federal Reserve. So if the Fed is raising rates, that's bullish for the dollar. And it puts pressure on businesses because, again, if interest rates are rising, think about it. If you're a business and you're borrowing money and the interest rates are going up, that's cutting into your bottom line because you have to pay more, throw away more money to your bank that has loaned you money. So it hurts indices, it hurts stocks, and it also hurts gold because one of the competitors to gold is, of course, the dollar, because a higher quoted dollar makes gold more expensive, and higher interest rates means that bonds are going to be more attractive. And bonds and gold have this interesting relationship where typically if bonds are offering more interest, it does actually drag away buyers from the gold market and more into the bonds world. So that's something to think about. Also, we could take a look at if interest rates are falling, it's the same thing. That's going to be more bearish for the US dollar, and we can flip it around and say that's actually a little bit more bullish for gold and indices. Next up, we can take a look at inflation. Is inflation rising in the United States? That's a question that we have to think about. If inflation is rising, the Fed may be more willing to act and raise interest rates, which, remember, we can revolve back here and say that that's bullish for certain things like the dollar. So if inflation is rising, that's going to be more bullish for the dollar. And if it's rising, it's also going to be bearish for the gold market. Now, also for indices, but there's some catalysts here. If inflation is rapidly flying high, like hyperinflation kind of thing, we may actually want to be careful about that because in hyperinflation situations, gold and silver do phenomenally well, but we're just talking about kind of normal levels of inflation coming into the markets. If inflation is falling, of course, that also means that we're going to be the opposite, bearish US dollar and bullish gold and indices. And again, another catalyst here, a little side note, is if inflation falls into the disinflation territory or below the 2% target that the Federal Reserve has, it can also be actually pretty bearish for gold because bullish for gold, because in that case, we're talking about fears like depression, where that might actually stimulate some buying into gold as people lose faith in the dollar. There's this whole, it's a complex picture, but I'm doing my best here to keep it as simple as possible. Next up, labor is pretty straightforward. If the market is seeing strengthening job numbers in the United States, that is going to be strong for the dollar because again, it builds strength in the currency, more reliance in the currency, and it's going to be kind of an interesting one. It's not necessarily bearish for indices because again, lots of jobs, strong jobs. It's kind of showing strength in the economy in the way that, you know, stocks are going to do well in some ways, but that's why there's a little star next to it. You can see a little star that I put here, but it also can mean that the Federal Reserve may act to raise interest rates as unemployment or employment, high levels of jobs being handed out, and wage growth contribute a lot to inflation. So inflation, again, a problem, can lead to interest rate hikes. So if jobs are too hot, it may increase inflation, and if inflation is increased, it may lead to interest rates going up, which can be bullish for USD and bearish for gold and indices. I know that was kind of complex, so please feel free if you need to back up in this video to rewatch some of these parts, especially the fundamentals, please feel free to do that. Opposite for labor weakening market, if the market is weakening in terms of jobs, that could be bearish for the US dollar as the economy is showing some weakness, and it could actually be bullish for gold as people are concerned about unemployment spiking. Gold tends to do very well in that environment. Same thing with indices. Gold indices, labor decreasing can be, it's kind of like a neutral. It can be kind of either ways. But generally speaking, indices are not going to do too hot in a labor shortage. That's going to probably indicate that companies are laying people off, which is also a sign of weakness there. So kind of a double-edged sword with labor. Finally, economic growth. This one's pretty straightforward. If the economy is growing, that's bullish for the dollar, and it is actually also bullish for indices in some way. A growing and expanding economy is going to hit the bottom line of stocks and equities across the board because companies are going to do generally better in that environment. And on the flip side, it's going to be bearish for gold because gold loves uncertainty and fear. That's where it does really well. So the opposite, growth and prosperity, is not going to usually do too much for gold in the bullish way. It might do fine in this environment, might be neutral, but really gold thrives in fear-infested areas or in super levels of inflation, that sort of thing. And same thing, opposite if the economy is contracting, bearish dollar, bearish indices, bullish gold, due to that fear concept we just talked about. So I know that was a lot of stuff on the economic data stuff, but I want to show you something really cool that the Edgefinder has been pre-programmed to do. All of that knowledge that I just shared, all the macro and stuff that we've just talked about, we have actually pre-programmed our software tool to do all of that AI stuff for you by generating biases based on the data that we have coming in. Our software pulls that data and showcases it in the top setups page. So I'll show you guys that so you can get a good idea of what that top setups page looks like and how it's scoring all the economic figures to help traders build a bias on the fundamental side. This is something that we specialize in, and we have a lot of people who use the tool for this exact purpose. I'll show it to you. So cutting to the chase with the Edgefinder, the main goal is to take into account tons of data like we're doing in this strategy guide that I'm doing on YouTube and automate that process, pick out all of that data, pull it all in automatically, and score it appropriately. So in this case, you know, we have all these different economic figures that we're talking about in the video. We're talking about GDP growth and inflation and interest rates and how all those things are going to impact various things. Well, the Edgefinder has been programmed to essentially take into account that data, take a look at what the trends are looking like, take a look at what the data is looking like, and generate a bias one way or the other. So on this top setups page, we have scored all of the different assets that we watch, and we actually do watch more than this. We just, you know, we filter basically for the most bullish or bearish assets, but you can see we track tons of different charts, anything from currency pairs to commodities, etc. We pull in all of this data and we essentially get bullish or bearish signals on the output here by taking into account all of the different metrics, scoring it up, and the higher the score, the more bullish, the lower the score, the more bearish. So for example, at this time, Euro, Aussie, Kiwi, Pound, these things are getting bearish readings because when looking at the fundamental and sentiment factors, we're overall getting a pretty bearish reading. This is why the Edgefinder has been our top selling product. It basically helps traders take a look at the fundamentals, the economic figures, as well as the commitment of traders data and retail positioning, and it automatically scores it all up using the algorithm that we've built on the back end to help us find better setups. So for me, in my trading, this is crucial to finding the setups that I take. No, this is not something that we're just simply trying to sell. Obviously, we are a software company, so selling copies is what we do. However, it is genuinely something that I have used for a couple years now to find the trades that I take through and through. It is my watch list. It's how I find setups and add confirmation on the fundamental as well as COT side of things. Next up is one of the most important components to my trading strategy, which is, of course, the exit. Everybody talks about the entry and how important the entry is, and it is certainly an important factor to finding profitable trading setups. But half of the battle is getting into the trade. The other half that's really important and often overlooked is getting out of the trade. So let's talk about exit triggers and how I exit a trade once I'm in it. And the first part is pretty obvious here. If we have a trade that just works terribly, meaning I buy something or sell something and it goes right against me, in that case, I'm just going to stop out quickly with a defined stop loss, which is usually for me pretty tight on the price. I like to get into a trade, and if I'm wrong, I like to be wrong pretty quick. And if I'm right, I like to be right over time, if that makes sense. So let's talk a little bit about the opposite. So let's talk about a good time. When things are working well for me, I use price action and market structure to trail a stop in the market. So what I mean by that is I usually wait for a move in my direction, and then I start trailing my stop loss behind price. So let's look at a bullish example really quick. Let's just say that whatever chart this is, I'm bullish on it, and I end up taking a buy off of those entry ideas that I mentioned earlier on the technical side. Price pulls back to a level of support, and I buy it, and I put a stop loss just below market structure lows. So I don't want to see this price do this, otherwise I'll just stop out very quickly. However, if the market starts shooting in my direction, I have a decision I need to make. How am I going to protect profits on this trade, but also let it run as much as possible? And for me, this is where the trailing stop comes in. As you can see, after the breakout here, once this market clears the highs by a nice margin, meaning it completely takes out the highs and closes above them, I'm looking for candlestick closes above by a decisive manner to the upside. I'm going to take that initial stop loss that was here and I'm going to move it up into profit, but not just anywhere, specifically behind the level of support that held out well for me. So again, I'm locking in a stop loss below market structure here. So this has just officially locked me into profit. I can't lose on this trade, and if this market continues, I want to be there to capitalize on that potential explosion higher. So I'm looking for the rare movements in the market that are incredibly strong and I can trail a stop for a very prolonged period of time. Essentially, I am going to be repeating this process until I trail out eventually. And as you can probably imagine, most of the time this doesn't work out perfectly, but every once in a while it generates a massive trade. And I'll show you some examples of that real quick now. When we came back to this area, this trend line to the upside, this is classic textbook technical analysis. Price pulled back to the trend line and I was looking to get long. All right, we're very, very close here, guys. I just want to see if I can capture the moment. Oh, and here it goes. We're very close. Let's see if we do get it. And there it is. We are all out of the NASDAQ trade. $3,735.19. What a trade. You can see right below my screen here that I'm up about $5,300 on this trade at this time. My stop loss placement here was below the previous lows by a wide enough margin that I ended up staying in the trade. I sold up in this area here. We had the massive CPI drop, which put me in a really nice little position. I trailed stops just above market structure highs here and out of the trade on the break there. So with that said, out for $10,000 of profit. This is definitely, for me, my record trade that I've ever caught on camera for foreign exchange. Now we can flip things around and talk about the bearish example. In this case, we're looking at a market that's moving lower, and let's just assume that I'm shorting this. Let's just say, for example, that it's gold. Let's say I'm short gold and I put a stop loss just above the trade here. So basically, price is retested. I've waited patiently for this entry and I've shorted it. I put my stop loss just above this structure high, and now I'm looking for this thing to go lower. Again, if it does go higher, I'm just going to stop out and take a small loss quickly. I'm not going to sit around and hope that it turns around. I'm just going to stop out quickly and take my loss as I should. On the flip side, let's say this market keeps going. Let's say this market explodes lower and we get a breakout to the downside. This time I'm moving my stop loss down below my existing entry, my sell entry, and I'm going to look to trail my stop. If this keeps going, again, I will have the opportunity to continue to trail a stop until I get stopped out for a profit. So that's how I manage the trade once I'm in it. Next up, we're going to talk about one of the most important components to profitable trading that is somewhat boring, which is risk management. But stick around with me. I promise it's very, very important to listen to this part. So personally, I risk between 0.1% and 2% per trade. Now, I already know people are going to say, what the heck does that mean? That's a wide area, and it is. I do actually risk a varying level of my account per trade when taking a trade, depending specifically on the confidence that I have in the setup. Remember when I showed you that watch list or the top setups page off the Edge Finder? That scoring algorithm that we've built helps me immensely to weight my trades. This is what is called weighting in my position size. Now, this is of course not like waiting in line, but like weightlifting, you know, like weighting. I'm weighting the trade. How heavy, how important is it that I put this trade in my account? And how big of a trade do I want to put on? 2%, I will say, is a very rare and very large size that I really don't do very often. Usually it's much less than 1% to 0%. Or 0.1%. Now I will clarify too, the reason I risk so small is because personally I am fortunate enough to trade my own capital. I don't have a funding account. I trade my own personal capital, and because of the businesses that I've started in my life and just the point that I'm in a very blessed situation to be able to trade my own capital, and that capital is a pretty good size, meaning I don't need to risk a lot of money in order to make a pretty sizable amount of money over time. So anyways, let's keep going with this. So the size of the trade varies on the confidence. Again, if the Edge Finder has a stronger reading on a particular asset and I like the technical setup, I might take a bigger position. And let's say that the Edge Finder is giving it like a bullish reading, but not like a screaming bullish reading. In that case, I might still look for a setup to be long on, but I'm not going to risk as much on that sort of trade. Again, the position sizing that I use is largely determined by the Edge Finder and the algorithm that we've worked so hard to build at A1 Trading. I will go ahead and mention this before we continue with the video. If you would like a copy of the Edge Finder or you'd like to learn more about the software that I use, the link will be down below in the description, and you can always message someone on our team if you have questions about the tool. Click that link, have a direct message conversation with someone on my staff who is trained to set people up with a copy of our tool. The Edge Finder is a tool that we've spent a ton of time, money, and energy as a team building, and there's 3 of us that have worked full-time for about 1.5 years to get it to where it's at right now. It's an AI tool that we have invested immensely in, and I'd highly recommend, even if you don't purchase a copy, to at least check it out and see if there's something about the Edge Finder that would be helpful to you. So again, feel free to message us using the link down below in the description, and you'll also get discounts if you do that because you are a YouTube subscriber, you're a YouTube viewer. There is a link there that will get you a special discount just by messaging in. So now let's talk about the good, the bad, and the ugly about my trading strategy. So obviously, as I showed you in the beginning of this video, I have used it to make a pretty good amount of money so far in one of my trading accounts that I show publicly, which is my Webull account. And I say that, like I said, not to brag, but to show you that, you know, the stuff that we do here, it has worked for time and time again. It's not a perfect magical system, and it has its pros and cons like any strategy under the sun. So I just want to say again, if you have not done this sort of thing before, if you haven't taken the time to write out your strategy and backtest stuff, I highly recommend that from this video, you take that away. If you get one thing out of this video, put this level of dedication and energy into building your trading strategies, and you'll have a lot more results, and you'll at least have a lot more knowledge about how well your strategy works and the pros and cons of it. There is no strategy that is foolproof. Everything has tough times in it. So let's talk about it. So the pros are pretty obvious right off the bat. This sort of trading has a lot of confirmation indicators. So I look for trades that have a lot of confirmation, fundamental, sentiment, and technical analysis lining up. Doesn't generate a whole lot of trades, which I guess could be, it's one of the cons here. You can see it's one of the cons of the strategy, but it does create strong confluence setups. It also has the potential to create some massive winners occasionally, as you saw earlier in this video. So with that, it does, so far as I showed you with the results, it's been very rewarding to trade this on what was not a massive account when I first started, but I've been able to grow it pretty sizably in just a couple years of doing this on that particular account. I have a couple different accounts that I trade. But the point here is that we also have to address the cons. The cons are, it has a low win rate. My strategy, where I mentioned I have a tight stop loss on my trades, means that my win rate is not all that high. So I have a low win rate. I don't get a ton of setups all the time. And I also have to do a ton of work on keeping up with the geopolitical side of things, as well, as I mentioned. So there is still a lot of work that goes into account. Even with all this automation and stuff, I still have to do my technical chart markups. But one pro, I guess, could be that, I have like a 1 hour a day max that I actually trade, and that's pretty stretching it. Most of the time, the software that I built sets me up to find setups, and then I just do some quick technical breakdowns, or if I'm in a trade, I'll manage that trade for a few minutes a day. It is not a huge commitment. And this is like perfect for somebody who has a busy schedule like myself. Again, on the software side, we run a software company that keeps you very busy. As anybody in software will know, it is a ton of work to build and maintain software. And so that's where I spend a lot of my time, is on software development with my team. And so again, that's kind of where we're at, right? So I don't have to trade for 4 or 5 hours a day. I have no interest in doing that. And because my time frames are not 5-minute charts or 1-minute charts, I'm mostly doing analysis for an hour or less a day on the 1 hour chart and the 4 hour chart. So it works for me. And maybe that's the point of this whole video too, is build your strategies into a plan like this. Understand fully what you're trading and back testing it thoroughly, but also find what truly works for you. So I've traded this way for years. I back tested this stuff extensively myself. This is a huge, this is basically my career dedicated into this stuff. I've spent so much time in this stuff and I love it. And I'm passionate about it. And I hope that if you're trading and you're serious, and if you made it to the end of the video here, do me a favor. If you made it this far in the video, type the words "I'm dedicated" in the comment section. If you made it this far, we're well into the video now. Props to you, shout out to you for putting in the work, and I wish you well in your trading journey. I know this stuff is not easy, and again, as you can see here with all this stuff we've gone through, it's a serious commitment, but I wish you well in your journey, and I hope this was helpful to you in some way. Also, I want to say, if you want more stuff from us, get yourself a copy of the Edge Finder. The link is down below in the description. If you want our tools, if you want our software, if this stuff would be helpful to you in any way, shape, or form, have a conversation with us. Message us using the link in the description. Same thing if you'd like access to our trade alerts. If you want to see full breakdowns and explanations to the trades that we are taking, you can see the Discord channel on the screen right now. You can see trade alerts from myself and from my colleague Frank, who has helped to build the Edge Finder. We're both working together, and we also trade in the live room each and every day. So if you'd like to join us, feel free. Use the links down below in the description to speak with a representative on our team to get yourself set up within our group, or you can sign up directly on our website, a1trading.com. And finally, we do have something free to give out to you to leave the video. Make sure to join our free Telegram channel, where we're putting out daily ideas, tips, and tricks for traders who are looking to improve. Thank you so much for watching this, and I wish you well in your trading journey. Have a great day. If you're looking to improve as a trader, we've got some cool free resources here that I wanted to share as we close today's video. Down below in the description, there is a link to join our Discord channel or our Telegram channel, and we also have our website, a1trading.com, where traders can get access to free course material to help you improve as a trader. Remember, we are also live Monday through Friday on this channel around 9:30 a.m. US Eastern, broadcasting most live news events and that sort of thing. So hope to see you there. And also, we do have a couple videos here showing up on the screen. If either of these seems like it might be helpful to you, then make sure to click here or here, and we'll see you there.